Welcome back to Explain the Charts. Today we're going over the EURUSD, the euro to US dollar pair, and we're looking at the news and chart data to see what we can find. We're specifically focusing on the 11th of October, 2024, where we see a significant pullback in the EURUSD. This pullback came after a period of relative stability and even some upward momentum, so it's worth investigating why this happened and what it might mean for the future. The recent news for EURUSD is dominated by the upcoming European Central Bank meeting. The ECB is expected to lower interest rates by 25 basis points, marking their third cut since June. This is a signal that the Eurozone economy is facing challenges, which is putting downward pressure on the euro. However, Fed officials have also signaled that the U.S. Central Bank is ready to cut interest rates, potentially weakening the U.S. dollar. This dynamic could lead to a balancing effect, but it remains to be seen which currency will ultimately emerge stronger. If we look at the daily chart, we can see the EURUSD has been trading in a range for several months. The pair has struggled to break above the 1.10 level, which acts as resistance. Support is located at 1.08, where the pair found a bounce back in August. The recent pullback has taken the pair back below 1.09, suggesting that the bears might be taking control. However, it's important to note that this pullback has not broken through the 1.08 support level, indicating that the bulls are still present. Let's take a look at the 1-hour chart to get a closer look at the recent pullback. We can see a series of red candles, showing a rapid decline in the price of the euro. The decline has been relatively steep, indicating that the bears are in control in the short term. However, there have been some small green candles, suggesting that the bulls are attempting to regain control. Looking at the 15-minute chart, we can see a more detailed view of the price action. The pullback has been accompanied by increased volatility, as shown by the longer candle wicks. The pair has tested several levels of support and resistance, but has ultimately failed to break through the 1.09 level. This suggests that the bears are struggling to maintain control and that the bulls could be ready to push the price higher. Now let's focus on the 1-hour chart and zoom in on the recent pullback to see if we can spot any patterns or potential reversals. The price has formed a bearish engulfing pattern, which suggests that the bears have taken control. This pattern is formed when a red candle completely engulfs the previous green candle. This indicates a strong bearish signal, which may lead to further declines in the price of the euro. However, if we look at the previous candles, we can see that the price has been bouncing off the 1.09 level, suggesting that this level could act as support. If the price breaks above the 1.09 level, it could signal a reversal of the bearish trend. The 1.09 level represents a key price level to watch as it could determine the direction of the market in the short term. On the one-day chart, we can see a significant support level around 1.08, where the price found a bounce back in August. This level could provide a strong foundation for a potential bullish rebound. If the price breaks below the 1.08 level, it would signal a breakdown of the range, which could lead to a significant decline in the price of the euro. Moving back to the 1-hour chart, we can see that the price is currently trading above the 1.08 support level. This suggests that the bulls are still present and that the bearish trend might be weakening. The 1.08 level represents a key price level to watch as it could determine the direction of the market in the short term. To summarize, EURUSD is currently trading in a range, with resistance at 1.10 and support at 1.08. The recent pullback has been driven by the ECB's expected interest rate cut, but the Fed's potential rate cut could balance out the impact. The 1.09 level represents a key price level to watch in the short term, as it could determine the direction of the market. If the price breaks above the 1.09 level, it could signal a bullish reversal, leading to a move towards the 1.10 resistance level. However, if the price breaks below the 1.08 support level, it would signal a breakdown of the range, leading to a potential decline towards the 1.06 level. The direction of the market will ultimately depend on the outcome of the upcoming ECB meeting and the Fed's policy decisions. Keep an eye on the 1-hour and 15-minute charts for short-term trading opportunities, while the daily chart provides a broader perspective on the overall trend.